Hey folks, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, July 13, 2015. So we got the move that we were expecting. Well, one of the two, right? The first move was either down here, which would have been a buy zone, or a jump over the head and shoulders neckline, which would indicate a failed head and shoulders pattern, and the market would continue higher. So we got the failed head and shoulders pattern, and the market should continue higher. But what do we have in terms of tomorrow and beyond? So let's discuss. We have the likelihood, and I'm not saying this has to happen or this will happen, but there's a likelihood of some kind of a pullback tomorrow, but it shouldn't be anything substantial. It's just normal market activity. When we have a big up move like today and we have a gap up today, it's not out of the ordinary to see some kind of a pullback tomorrow. Maybe it'll coincide with some news on Greece. Oh, they don't have a deal. They do have a deal. You know how that works. It's been going back and forth. And don't be surprised if you wake up tomorrow to see slightly down market. Where would that take us? Well, the first target I would have would be about 209 on the SPY, and that would basically just retrace, 10 points, maybe a third or so of the up move from today, something in that neighborhood. Anything more than that would likely bring us into the top side of this head and shoulders neckline, and that would be about 208.50. I don't expect more than that. Could it happen? Anything could happen. However, I don't expect it, but I do expect somewhat of a pullback. It may not even be a long-lived pullback. It may even be just a shallow pullback in the morning, if at all, and then hopefully a resume of the up move. Now, further that, where is the up move going to take us? Okay, so I readjusted some numbers on the upside here, and our target on the upside, our first target is going to be 212. Okay, 212 is going to be a target on the upside, and if we get to 212 in short order, there's most likely going to be more upside, maybe even to double top up here or slightly beyond. Slightly beyond could take us up to 214. It's not much beyond, but it is a little bit beyond. After that, we'll see how the market reacts. I'm expecting some more downside a little bit later, but let this weekly bottom, and if you remember, last week was a weekly bottom, and the weekly bottom came in on time, right? It was a weekly bottom last week. All this stuff was last week, and we had a strong move off the weekly bottom, and this is the result of that, okay? So just let it happen. We're probably or most likely going to see more upside in the market, and I know some folks hopped on the gap up today over the head and shoulders neckline, and that's fine. You just have to be prepared to sit through a little bit of a pullback scenario. However, Wednesday should be a pivotal day in all markets, okay? Gold, oil, what else? The stock market, of course, the bond market, everything could be a pivotal day on Wednesday, okay? So if we get a slight pullback tomorrow, most likely we'll finish near the flat line, maybe slightly down. If we don't get a pullback, we may just see another up day tomorrow, and that's perfectly fine. Wednesday should be a pivotal day in the market. So preferably, I would love to see a slight pullback tomorrow, finish slightly down, maybe flat, and then we can see another acceleration move on Wednesday. That's the preferred move. The market doesn't necessarily do what I want. It does what it wants. And so what we're going to do is just wait for the market to tell us what to do, tell us what it's going to do. But right now, there's a high likelihood that we're just going to see higher prices for the next couple of weeks or beyond. And just play it that way. So you're able to buy pullbacks in the market during the next couple of weeks. And we should see that 212 area hit. And then depending on how we get there, we'll look for higher prices after that. But that's the first target. So you have about another, let's say $2.5 of upside roughly, give or take, in that neighborhood in the SPY. If we just want to flip over to the ES contract, that takes us basically takes us about to the 215 area. I didn't adjust this yet, so let me do that now, and then I'll leave it in there for the interim. 2115, and that should be the upside target on the ES. And that was always an important number. If you remember from a while ago, we had 2115 in there while we were up in this area here, chopping it around through that area. So that was always an important number. Hit it here, and that's going to become important once again. So we had the gap up this morning, and we'll see some follow through. But don't be surprised to see the pullback. The pullback in the ES could bring us down to the 2084, 2085 level. Any more than that, maybe slightly more, but I don't see it. That's about my maximum downside for tomorrow, if we should see any downside pressure at all. Don't count on the downside pressure. I'm just making you aware that if you see some negative news on Greece and the market's following it down a little bit, don't get scared out of it. It's just a pullback unless and until we see the market go back down below this trend line here or the head and shoulders neckline. Now, this is a failed head and shoulders pattern. So even if we go back below this head and shoulders neckline, we're just going to in fact, I'm going to take it out because I'll leave it in for the time being, but we're going to recalculate the numbers if we should see a larger pullback than that. I don't anticipate it, but the area down here is now not necessarily on the table in terms of the head and shoulders pattern because it is a failed pattern. We've got the SPY above the neckline, the ES above the neckline, and of course the SPX or the cash index above the neckline, of course. So we'll just take a look at that, but you know that that's above the neckline if all the other ones are to this magnitude. So there you have it on the cash index. So everything is above. We went into the 50-period moving average today, and that was a natural stopping point for the market. We pierced through it on the ES contract, and in the SPY, we didn't quite get there. So I would anticipate getting there, if not tomorrow, the following day, or beyond. So remember, Wednesday's a pivotal day, and there you have it. So we gapped up above the neckline, and that takes the head and shoulders pattern off the table. Now, a couple other things I want to talk about. The IWM. I always talk about the Russell 2000 index as small business in America, and that's typically the index that leads the market in one direction or the other. Okay, it led the market down, and it typically leads it back up. But interestingly enough, we didn't have a stronger day in the IWM than we did in the SPY. So that tells me, it just gives me a slight indication that we're going to see a pullback tomorrow, but it's not a big deal. So I don't want you to get scared away by the pullback. I'm just suggesting that I would have liked to see the IWM a little bit stronger today, only because we had everything inflating today. So a stronger IWM would have given me more conviction of the upside move. But nevertheless, I do have conviction of the upside move. I just would have liked to seen a stronger IWM. Let's look at the VIX real quick. Remember, I said that 20 was going to be the upside target on the VIX, probably not much more than 20. That happened. Now, where's the downside move in the VIX? Well, most likely we're going to head down to the 12 area in here, maybe even 1150. And if we do get a move like that, we're probably going to be okay to buy the VIX. Now, how do you buy the VIX? Well, you can do a couple of things. You can buy calls on the VIX. VIX has calls and puts. You can buy calls on the VIX for another up move when we do get down there. That'll coincide with a pullback in the market. And when we get down to about the 12 or 1150 area in the VIX, that should be commensurate with the 212 area in the SPY that we just talked about before. And another way to play the VIX is the ETF, the VXX. I don't particularly like that one. I don't play that one, but that's another way. The reason is because those 2 times ETFs or inverse ETFs and 2 times ETFs, 3 times ETFs, they tend to not necessarily track the market exactly the way they should, and they're a little sketchy in my mind. However, If the VIX does get down to that area, it should find very, very good support down here. Look at all this chart support down here. There's no reason that the VIX should continue lower than $11.50 or $12. So just thought you'd like to know that. Let's go over to the gold market. Now, gold is still acting weak, but we're still above the 1155. So we didn't get to the 1170. We certainly didn't get to 1174, but it is weak. But as long as we stay above 1155 on a daily closing basis, there is a chance that we see higher prices in gold. If we close below 1155 with say a couple of $2 margin of error, give or take, anything with conviction below 1155, then I think 1130 is in the cards. I've been giving you that number, so I'm standing by that. It hasn't changed. Do I see higher prices in gold for the short term? I don't really see it, although it could happen. I don't have anything on my work or in my work that tells me higher prices are coming in gold right now. But if we do get higher prices, you're going to see a lot of resistance at 1174. So should we get any kind of a move or a powerful move from here upward, I'll certainly reevaluate it and let you know what I find. But right now, we're just kind of what seems to be in a holding pattern. Not to say we can't move higher, and I'll show you what I'm looking at. And this is usually somewhat of a proxy. So the GDX, and I know some of you like to trade the GDX, and this is why I'm bringing it up, is these numbers, these lines don't matter anymore. Let's just get rid of them. Clear up the noise on the chart. And you had, I wouldn't necessarily call this a reversal day, but it's a reversal in the making in the GDX. So if you go to the hourly chart, you can see here that we had a nice reversal intraday. We went sideways for a few hours, had another up move, and then closed above the 20-period moving average. So on a short-term basis, there could be more upside. And the reason I bring this up is because a lot of times the GDX or the gold miners in particular will lead the gold market, specifically on the way up. It's usually a proxy for higher prices in gold. That's why I'm a little bit suspect in gold, and I keep thinking that as long as we close above 1155 in the gold futures contract, then there is some hope for more upside. Where would that upside take us in the GDX at least? Well, there could be upside to 1710, which isn't that far away, and you're going to have some resistance there, and then you'll have a lot of resistance at 1750. So if anybody likes to trade GDX, that's your bogey. And if you want to be long GDX, you can simply put a stop on a close below, a daily close below the low here, which is 1640. So a daily close below 1640, okay, which is today's low, 1640, would be your stop out. So it's a relatively narrow stop out, and it's a pretty decent risk reward. If we should get a little bit of a move higher in gold, you will get the move higher in GDX. Okay, let's move on. Oil. Oil, I have some interesting numbers in oil. So we are putting in a bearish pattern in oil, but you have to know that a lot of times, and this is why I haven't been anxious to short oil from here, even though I'm saying that we could see lower prices, because a lot of times down at lows on the charts, these patterns tend to fail somewhat, and same thing goes with highs on the charts. They tend to fail. So I'm not anxious, but what I am saying is that I put another line in here at 52.80. Now, if we get hourly and then a daily close above 52.80, that's bullish for oil, and we should and would see higher prices. And maybe that coincides with Wednesday's pivotal day in all the markets. So what I would say is if tomorrow we see oil trade above 52.80 and close above there, then I would suspect that we're going to see higher prices on Wednesday and maybe beyond in the crude oil market. So that's something. If we can't get above 52.80, then the bearish case is intact, and we would see lower prices in my opinion. But we've been down here for a while, counting the big down move, 2, 3, 4, 5, 6 days. So tomorrow is a pivotal day. Markets a lot of time like to move on the 7th day, and we'll see how that plays out. So if we do get an up move above 52.80, you can gauge it by hourly closes above 52.80. And remember, the hour is on the half hour. Then you can probably take an oil trade for higher prices using 52.80 as a stop out on the downside. So that's something in oil. That's about all I have right now. But just be real quick before we leave the oil market, let's just take a look at the intraday so we can get a sense for how it traded. So you can see that we started to move higher. We got above the 52.80, failed, and came back down. That doesn't mean we're not going to try it again, and we'll see what happens. You know, maybe the Iran thing will play some havoc, just like Greece is playing havoc in the market and the media, whatever it is. I don't really care what the reason is after the fact. All I'm saying is 52.80 is your number. That's basically your pivot point in the market. Above 52.80 is bullish. Below 52.80 is going to be bearish. So that should give you a good indication in oil. Bonds. Let's look at the TLT. So if you remember, we'll go to the daily chart. If you remember, the other day, last week, we used the move up here to say that this was going to be the top for a while in the bond market, and it was the top for a while in the bond market. Now we're back down to the lower end of the channel here, and as you know, I'm not necessarily convinced that this is going to hold, but we do have a daily cycle bottom scheduled for tomorrow in the bond market. So we could see lower prices tomorrow and then a reversal, or we can just see a reversal from this point forward. And I am expecting a reversal. How high? I think we could at least get to the top end of this channel and potentially beyond. It depends on how powerful the move is off the daily bottom. So it's not a weekly bottom like we saw in the stock market. In the stock market, you could see how powerful that weekly bottom is. You know, the last couple of days in the up move in the stock market was pretty powerful, and that's an indication that that weekly bottom was playing out. So the daily bottom in the bond market won't be as powerful, but nevertheless, it should be powerful enough to take us at least up to the top end of this channel or beyond. So that's what I'm looking for. But you're going to have some resistance at the 50-period moving average. You'll have some more resistance up here at 120. And we'll have to see what happens from there. But from this point forward in the TLT at 115.69, that's a pretty good move. So anybody that's interested in playing long the bond market, this would be a pretty decent area for that to take place. How about we shimmy over to the dollar? And the dollar had an up move, and I still say that we head to the 97.75 target that I've had in there for a while now, and I still think that's viable. I think it's reasonable, and I think it's coming. So if we do, you'll obviously see downside pressure in the euro, and you'll hear all the reasons why relating to Greece after the fact, but I'm looking for further upside in the dollar and further downside in the euro. I think that's imminent, like now, like tomorrow, and then potentially Wednesday with the pivotal day may reverse that market. We'll have to see what tomorrow does in order to make any determination on what the dollar would mean, would do on Wednesday. But for now, that's what I see. I see the 97.75 coming in short order. That's what I have in my work anyway. So hopefully that's helpful. Let's go to the natural gas market, because if you remember, let's recap last week. So last week I said if we closed below this low, then we would see lower prices. We saw lower prices, but then we came into a daily bottom, and then I said we would see higher prices. So this was kind of a little bit of a fake out, and you know, here's the problem. When we saw the close below here, there's really no telling how far down we would have gone. Whether or not we would have gone to double bottom or not or beyond is anybody's guess at the time. And anybody long natural gas in the futures market knows that that would have been a painful move. That's a decent move, and who wants to be long several contracts in natural gas if you're long in this area all the way down here? It's not a pretty sight, right? Not a terrible move. It's not out of the out of the realm of possibility, but nevertheless, who wanted to be long? But then we came up with the daily cycle bottom over here, and now we've seen the up move here. And I think there's higher prices coming in natural gas, and I don't think $3 is out of the question, or even to the 200 period moving average at 313, or it'll be slightly less by the time we get there, because this is a downsloping trend line. But nevertheless, we should see higher prices in natural gas. But on Wednesday, you can look for natural gas to react. So it really depends on what happens tomorrow, since Wednesday is a pivotal day in natural gas. Okay. Let's take a look at a few stocks. Let's first take a look at Shield, or Sears Holdings. Now that got walloped with the market, and I think we'll see a resumption of the up move in Sears Holdings, but I'm not going to give it too long of a leash. I've already given it a little bit longer than I would have liked, only because I knew that the weekly bottom was going to show up, and with the market having more upside potential, I think most or all of the stocks will get inflated, and that would be a better area to exit than down here. So that's really all I'm looking for. I'm looking for a move maybe up to the 20 period moving average, or even back to the 2746 area. We'll see what happens, but nevertheless, this is a little bit of a busted chart, and a little disappointed in Sears Holdings, but that's the stock market, folks. We understand how that works. But I am looking for more upside, only to coincide with the up move in the overall market, and the fact that we have options expiration this week. Stocks that are at extreme lows or extreme highs tend to go the other direction during options expiration week. So that's another reason why I wasn't so quick to pull the trigger and leave the game. I think we can get a little bit more upside this week and maybe beyond with Sears Holdings. Next up, let's take a look at SolarEdge, SEDG. And we had a nice up move today in in SolarEdge. And let me explain the reason why I didn't leave this game in SolarEdge so fast, because I want to show you. Oh, I already drew it in. Pardon me. So we had a normal 618 retracement in SolarEdge, and the fact that we came into the 618 and it held, and then we had the up move off the 618 retracement. This is a normal, this is normal market activity. We had the IPO here, we made a top up here, and then we came in to retrace 618. Would I've liked to seen us stop, up here at the 382 or the 50 at worst? But yeah, it got taken down with the market, but it held, and therefore we saw the up move here, and I think there's more upside potential coming in SolarEdge, and it should get lifted up with the rest of the market. As the market gets inflated, most or all the stocks will get inflated over the next week or two. So I'm looking for more upside in SolarEdge. Where does that take us? The first target really was at about 38 and change today. 34 and change today. And then the next target would be 37. So I'm looking for a move up to at least 37 over the next several days, week or so. And that's why we're still in this game here. If we just take a look at the intraday, just to get a little bit of a snapshot here, you had a good up move today, and there's no reason why this shouldn't continue. Even if we get a little bit of a retrace tomorrow, this is a nice, powerful move, and we should get a resumption of the up move in this area here. Now, are we going to get back to $40, $42 a share? That remains to be seen. Some of that will depend on the market. Some of that will depend on SolarEdge. I know that there's some institutional ownership of SolarEdge, and that should put a little bit of a bid underneath the market, or keep a little bit of a bid under the market. But we'll see how that plays out. I'm not going to give it too much of a leash from this point forward. I just want to get back to a reasonable number, and then we'll leave the game in SolarEdge. Next up, let's look at Southern Copper, and there's a good reason why I want to talk about Southern Copper. Let's look at the daily chart. And in Southern Copper, let's look at the retrace that we got in Southern Copper first. And you'll see that we came, you see this spike almost to the 618. That's normal market behavior. We had to move off that. That's telling us that this was a normal retrace from this pivot low up to the high and back down. This should produce higher prices, but there's another reason looming. And the reason looming is that we had either last week or this week, most likely last week since we had a low. Let me go over to copper for a second, if I can find it. I can't find it. Okay. So in copper, here's the continuous contract. We had a weekly low in copper. This should produce, just like we had a weekly cycle low in the stock market, there's a weekly cycle low in copper. And this should also produce higher prices in copper. And with higher prices in copper coming and the stock market with a weekly cycle bottom, that's, two areas in our favor for Southern Copper. So that's another reason why I want to stay with Southern Copper. I'm looking for higher prices in Southern Copper, and then we'll look to leave that game along with a lot of the other stocks. We're going to look to play or take some short positions in stocks, probably not for a couple of weeks, but just so you're aware, the portfolio is going to significantly change over the next couple of weeks to reflect some short positions in copper, and we're going to take some profits in some of the longer standing and shorter standing positions that are currently in the portfolio. Okay? Let's look at one more. We'll look at Delta Airlines. Delta Airlines is having a nice move. I think there's higher prices in Delta Airlines, despite what happens in the price of oil, whether there's a deal with Iran or not. I don't really care. There's higher prices coming in Delta, should get taken up with the market. If once we get above the 200 period moving average, we could get to $46 in Delta before I'm ready to sell Delta Airlines. We have a nice almost 8% gain in Delta, looking for higher prices in Delta, so we're going to stay with that one. And I think we're going to leave it there tonight. We'll cover more stocks as the week goes on. But nevertheless, look for higher prices. Look for most or all the stocks to be inflated with the market. And then we'll make some significant changes to the portfolio as the market reaches its, and let me just flip over there for a second before we give it a wrap. As the market reaches its upside target, we're going to shift the portfolio to be somewhat conservative and or aggressive on the short side as we get to this double top area, either 212 or beyond in the SPY. So hopefully that's helpful, folks. I'm David Frost, my strategic forecast. Thanks for tuning in for another episode of Common Sense Market Analysis.